Good morning this Wednesday, the 29th of March. I'm Grady Wolfe, a market analyst with Bell Direct. A number of Australian economists are now expecting a 25 basis point rate hike in April when the RBA next meets, following the release of Australian retail sales data for February out yesterday, indicating a rise of 0.2% for the month or 6.4% from February 2022, on the back of a 1.8% rise in January. The retail data shows consumers are still spending despite the increasing cost of living pressures down under, with $35.14 billion spent last month. Department stores had the biggest increase in monthly turnover, while household goods retailing remained flat, which isn't great news for the likes of Temple Webster and Nick Scali. UBS, though, is adamant the RBA won't hike rates at next week's meeting, but instead will hike by 25 basis points in May. Australia's Consumer Price Index, or inflation data, is out today for February, which will give a greater insight into how successful the RBA's monetary tightening policy has been to date, and will give the RBA a better idea of whether to pause or hike is most appropriate at next week's interest rate meeting. Locally yesterday, the ASX rallied 1.04%, led by a surge in energy stocks, with the sector jumping over 4%. Lithium mining and production companies felt some much-needed relief yesterday, following a recent sell-off amid declining demand outlook. The reason for yesterday's boost in lithium stocks was due to lithium giant Liontown Resources announcing it had received and rejected a takeover offer from Albemarle, the world's largest lithium producer, in a deal worth $5.5 billion, on the grounds of the offer substantially undervaluing Liontown and its assets. The announcement sent shares in Liontown soaring 68.5%. The markets globally are still responding to the unfolding banking crisis, with every day presenting a new look into what could be an isolated incident or the unravelling of a global banking crisis. ANZ Chief Shane Elliott has said the latest turmoil in the global banking system has the potential to trigger a financial crisis, but it's too early to predict if it could lead to a repeat of the 2008 GFC. The latest global bank to show signs of crumbling under pressure is leading German bank Deutsche Bank, as shares in Germany's leading lender tumbled as much as 14% on Friday, sparked by a surge in the price of bank credit default swaps, which are a form of insurance for bondholders. Much like the Swiss regulators swooping in to support Credit Suisse, though, the German government has said it will stand behind Deutsche come what may. Over in New York overnight, Wall Street had a mixed session on Tuesday as rising bond yields placed pressure on high-growth technology stocks. The yield on the 2-year US Treasury note climbed back above 4%, which makes future profits for growth companies less attractive, as higher rates mean that earnings years from now are worth less today. The Dow Jones ended Tuesday's session down 0.12%, while the S&P 500 lost 0.16%, and the tech-heavy Nasdaq took the biggest hit, ending the day down almost 0.5%. In Europe overnight, investor concerns over the unfolding banking crisis in the region led to a muted day across the markets in Europe. Germany's DAX closed up just 0.09%, the French CAC added just 0.14%, and in the UK, the FTSE 100 rose just 0.17%. On the commodities front this morning, oil has advanced 1.1% to trade at $73.60 a barrel amid supply concerns held after a legal dispute halted around 400,000 barrels of oil exports a day from the Cayenne port in Turkey this week. Gold is up 0.84% at $1,973 an ounce, and iron ore is flat at $122.50 a tonne. The Australian dollar is buying 67 US cents, 87.58 Japanese yen, 54 British pence, and 1 New Zealand dollar and 7 cents. Ahead of the local trading session here in Australia, the SPI futures are anticipating the local market will open 0.37% lower to start the midweek trading session lower. And now let's dive into some trading ideas for your consideration today. Bell Potter has downgraded its rating on United Malt Group from a buy to a hold and has significantly increased the price target on the company from $4.25 to $5, following the company announcing it has entered into a process and exclusivity deed with Malterie Soufflé for the takeover of UMG in a deal worth $1.5 billion. Bell Potter sees the takeover offer and subsequent subsequent share price rise by 30% after the announcement well exceeds Bell Potter's passive valuation for UMG and therefore justifies a downgrade to hold from a buy rating. And Trading Central has identified a bullish signal on AMP following the formation of a pattern over a period of 27 days, which is roughly the same amount of time the share price may rise, from the close of $1.06 to the range of $1.17 to $1.19, according to standard principles of technical analysis. And that's all we have time for this morning. Have a wonderful day, and as always, happy investing.